And we're now live. So hello everyone and happy new year. So big happy new year from all the BGA team, the Blockchain Game Alliance. This is the first panel of the year and this is going to be a really exciting one, kickstarting the year strongly on a hot topic, NFT of course, and all the new frontiers and application and economies in this very hot space. Before we're going to have a great panelists and host today, I'll run through the usual presentation of the Blockchain Game Alliance for those of you who are not yet familiar. We're a non-profit organization that's committed to promoting blockchain within the game industry. We've grown tremendously last year, up to 169 members, and recently published our 2020 year report, which I really invite you to read to get a good snap of what's happening last year in the industry. Our goal is really to spread awareness about blockchain technology and encouraging its adoption by highlighting the potential for game studios, for creators, for virtual worlds, for art and beyond. And then how NFT, decentralized gaming, DAOs, DeFi, and all those are just not buzzwords, but are real technologies that can impact and transform the way that communities are being made, games are being made, and how users interact with those, specifically in the gaming industry. We do provide an open forum for individuals and companies to share knowledge, to collaborate, to create new standards, establish best practice, and of course, network with each other. So this is really the core activities from the Blockchain Game Alliance: networking, research and reporting, representing blockchain game companies, and advocating for the use of blockchain within the game industry. I'd like to give a big thanks to our sponsors, the Going Tribune, One Way Blog, Ubisoft, Animoca Brands, Arc.io, Galaxy Interactive, Maker, Algorand, Chromia, Matic AMD, and Mobox for supporting us. And a big cheer up to all our members who are from various sides of the industry, whether they are blockchain games, chain and protocol, press and media, games, development solution, esport, or investors as well, or others categories. You can see so many logos on this map. Every time I see it, I'm so excited to see how we're all working together in the BGA. We've been hosting tons of events. I stopped counting, but here you can see on this image like all those different panels, whether we had interviews with industry leaders and video games executive, workshop on various thematics. We launched panels with some of the best people in the space, the smartest and brightest brains who are making things move forward, experiment, push for adoption, etc. We also had a very exciting BGA demo day last year where all our members' company were able to present what they are doing, and we also been offering free speaking ticket to various conferences online. Without any further ado, let's jump into today's topic: NFT New Frontiers, Application and Economies. And for that, we will be welcoming Joel Hubert from NFTs, Patrick Barile from Twobadour, Twobadour from Metaverse, and Alex Gausman from NFTs. So, and we'll have this conversation hosted today by Serena Tabashi, which
hi everyone.
I'll let now introduce herself to you and run the show.
Thank you so much, Seb, and welcome everyone, and happy 2021. So I would love to kick off the conversation by giving the opportunity to our speakers to give a quick introduction about themselves and about what they're currently working on. So before we get onto the question, I would love to pass on the word to Joel to give us a few words about himself.
Okay, hi. I'm Joel from Niftex. Together with my co-founder, Mark, I started Niftex in January of last year, and we went live in May. I made a bunch of slides, but maybe we want to do the introductions first, or do you want me to go straight into the presentation? I'll just run through it.
No, it's fine. Just a few words about yourself and your business, and then we can get onto the slides soon.
Yeah, sure. So we went live in May with Niftex. The idea was to open up, a new type of market for NFTs that would make it more efficient for them to be traded. We're doing that through fractional ownership. I think for the past 9 months, we've done about $5 million in volume in secondary markets. And we're very encouraged. We've done fractionalizations for many different types of NFTs, from art to in-game assets to utility tokens like ENS domain names. And now we're working on the second version of the platform, and we're hoping to release it very soon.
Wonderful. Thank you so much. It's nice to have you.
Thank you.
And then we have Patrick.
Sure. Hi, everybody.
Hi
My
there.
name is Patrick Barile, working at Barile. We have been around for the last 3 years, so we were pretty early in 2018. We track all the decentralized applications out there, so not just only games, but also DeFi and so forth. We have a couple of new products, which some of which I want to unveil or want to show you today. Very much focused around NFTs, because we believe this is one of the most exciting places in the industry. So yeah, and thanks for having me.
It's great to have you. And we then welcome Twobadour. Hello, how are you doing?
Hi, everybody. Thanks for having me here. I'm Twobadour. I steward Metaverse, which is the largest NFT fund by value. I head community and communications with Lendroid and Whale Street. And I'm a digital truffle sniffer. I try to find diamonds in the rough in the NFT space. I love DeFi. I get NFTs and I write about all of it. Happy to be here.
Super. And then we welcome Alex. How are you doing?
Good, thanks. Yeah, I'm Alex Gausman, and I'm working with NFTX. We recently launched Community Raise and our DAO, and are now bootstrapping our platform. And yeah, it's really exciting to be here. I didn't prepare much of a presentation or anything, but I'm excited to take part in the discussion.
No worries at all. And this is actually a good opportunity to tell our audience to feel free to send over questions and comments to us. So this is going to be a free forum conversation. So we've prepared a number of questions for our speakers, but feel free to join the conversation as we go through the topic of NFTs, new frontiers, applications, and economies. So to start off the conversation, I will ask you, each of you, if you can give us a description of what do you think, or how do you define NFTs in your own words, but not a technical description of it. So maybe we can start from Patrick.
The newest and coolest asset class in the world. This is going to smash everything.
What about you, Joel?
A way to enforce digital scarcity, which I agree with Patrick is revolutionary.
And Alex?
Yeah, I think that the token metaphor actually works really well for NFTs. They're like physical tokens in that you can't break them into smaller pieces, or at least not easily, and you can also kind of trace them physically. So yeah, I like the token.
Wonderful. And Twobadour?
I'd say NFTs are tokenized stories and experiences, which is what makes them so appealing to the gaming industry. But tokenized stories and experiences with provenance, which is what makes them kick-ass.
Mm-hmm. That's a good approach to it. And Seb, what about you?
Well, thanks for asking me. I love all those definitions already. I was really excited. Patrick's and Twobadour, thanks. Well, the one I personally like is, like, for me, NFT is not just a token or game item. It's actually really a community behind. So NFTs are powerful communities and strong enabler behind of all sort of benefits.
Mm-hmm. Wonderful. Thanks. So my next question to you guys is, what challenge is each of you addressing in the NFT and DeFi space? We can go around again from Patrick.
Sure. Transparency. The more transparent the market is, the more people are going to trust the market. They're going to, if they trust the market, they're going to invest more. So we believe that transparency is key. Therefore, we're helping with data. Yeah.
Thank you. And Alex?
Yeah, so
what are you
the big thing for us is just making it easier for people to get exposure to the NFT space without having to spend a lot of time or effort learning about it. So yeah, basically like index funds and accessibility to a certain degree.
Mm-hmm. And Joel?
Yeah, I think, very similar to what Alex and Patrick said, but also that we generally believe that bringing back fungibility to some extent can really help propel the NFT space to a different level, a different level of volume, but also, like Alex said, make it easier for people to get into the space, which works very similarly to people, buying Bitcoin if it goes up, but then as it sits in their portfolio, discovering what the rest is about. I think it's a very similar vibe here.
Twobadour, what are you trying to solve?
I think that the bigger challenge in the NFT space is less financial, because the DeFi gang are already taking care of it. I think the bigger challenge is cultural, in a sense that it's really hard to find NFTs that carry a story that will remain relevant over a period of time. So when I said truffle sniffing, this is what I meant, trying to find those diamonds in the rough. Because right now, the supply of NFTs is less than the demand, but once we reach that critical mass, it'll become increasingly difficult to identify those NFTs that last and not overwhelm us.
Interesting. So throughout the years, we've seen a number of events, regarding NFTs, whether related to art or to the metaverse or to blockchain games. So my question to you is, do you think in 2021 there will be even further experimentation in the NFT space? And if so, why? Anyone can start this time.
I think I would. I think what Twobadour does with his Twobadour, perhaps you go ahead, because you have a quite interesting story you shared with me the other day. That is quite interesting what you do in terms of you buying high value NFTs and so forth. And yeah.
Right. So yeah, I'm positive. In fact, I think this is one of those answers in which all of us can agree on, is that the NFT space attracts a wide range of people. I mean, which other crypto phenomena attracts as many artists and technologists and cultural phenomena in the same place? So I think it attracts a really varied crowd, and there will be further experimentation, and all of it towards creating more how do I say, experiences that many people can enjoy at the same time. And I think that makes the NFT space and the concept of NFTs the touchstone of crypto as a whole.
And Alex, what do you think we will see happening in 2021?
So yeah, I kind of think it's going to be a lot of commercialization this year, and I'm not particularly stoked on that, but it's also good to see things going mainstream. Right now, we see most NFTs are strongly correlated with ETH, and I really like that personally, and I think that might start breaking down more as we see more mainstream commercialized options that are priced in USD and stuff. So yeah, I do see the space changing a bit this year, and yeah, for better and for worse.
That's an interesting view. So Joel, the next one is for you. So do you believe that the saturation of the NFT supply has triggered a novelty approach to applications and economies? So sort of following up from the previous question, after all that we've seen happening throughout the year, what are your views on the upcoming months related to applications and economies?
So the first thing I would say is that we're nowhere near saturation, right? So I, on the one hand, do think there are many NFTs being created, and not all of them may be as valuable. But if we really want to take the NFT space to where it really belongs, which is basically a protocol to enforce, digital scarcity and do things around unique objects, we're only at the start. We're like the 0.001% of the start, and the idea is that not only do we onboard most assets in the real world onto this, protocol to easily enforce property rights, but virtually there's an unlimited supply. So I would say, first of all, we're nowhere near supply. We're nowhere near saturation. And has it triggered a novelty approach to applications and economies? I think, of course, in games we're seeing, NFTs at the very least being experimented with. I think some businesses are already successfully building on it, but are we at a stage where we're really seeing NFTs change the course of things? No, I don't think so. Although you see it on a small level. I see many artists skipping the entire cryptocurrency cryptocurrency hype and going directly to selling NFTs, like people did, for example. I think that's really interesting because here you see normal people that are not crypto related directly jumping into NFTs, not even going through, buying Bitcoin or Ethereum or some random thing because they heard about it on the street or from their barber. So on the micro level, yes, but we're still very much in that experimentation phase. I think 2020 was a really strong year for experimenting, and 2021 will continue to be so. But I don't think we're yet at a point where NFTs are universally understood and so can really start playing a major role in changing, how the entire world works.
Mm-hmm. Does any of you have a different opinion about this?
Something that you could say, bit of an echo. That in this year, you're going to see certainly experimentation, but you're also going to starting to see segmentation, meaning that last year NFTs were still grouped together as one phenomena, and probably this year we'll start seeing that different types of NFTs, so different sectors of NFTs were going to start developing their own character, their own identity. And what I mean by that is if you start looking at real estate is certainly one sector, then you're going to see art as another sector, you're going to see games as another one, fourth, collections, whatever collectibles. So, and these four different sectors in this space will, I assume, start developing a life on their own. And when I look at my colleagues at Barile, we're quite a large team these days. We're 30, 35 people already. We're starting to see that most of the people at Barile are into NFTs, which is super exciting. So everybody's investing and playing, and some are flipping, and some are breeding, and it's a very diverse field. But it looks like that some of my colleagues are starting to find their own segments. So some are going into real estate. Some want to be very early on and not just investing, but also being with real estate communities, with Sebastian, with a sandbox or crypto voxels and so forth. And that's going to be a completely world on its own. Then you see the art community. I'm more in the collectibles field. And we share KPIs across these. We share certain approaches. We discuss how valuation is going to be but what I think is going to be interesting in this year in 21 is how these different verticals or sectors in the different NFT areas are going to start evolving. That's something I'm really interested and curious about.
Mm-hmm. Absolutely. Thank you for sharing your vision, Patrick. I think now is a good time if you like to share some slides, Twobadour and Joel, because I would love to start looking a bit more into what you do, and then we can continue with the questions. So Twobadour, do you want to go first?
I think I'll let Joel go first. He's here. Okay.
Oh, okay.
My screen's up. So okay.
Sounds good. Joel, I think you're on mute. So cool, wonderful.
Hello.
Yeah, we can hear you now.
So I'll do it. I'll start then. Does this work? Can you see this?
Yeah.
All right. Okay. So I just made a few slides to just summarize what NFTs is and what we've done and where we're going. I'll try to run through it. I don't think it should be super long. So anyway, we started basically because non-fungibility, while of course we all agree it's super interesting, and of course comes with a number of frictions as well. For example, if you have a market of NFTs for a particular game, how can you summarize the performance of the market overall? Because all these assets are unique and may have their own, dynamics in the way they trade and the way people value them, etc. So in 2019, we decided we wanted to do something about this. We wanted to start developing tools to make this better. So what we did, for example, is we built a number of price indexes for Axie Infinity, Decentraland, Gods Unchained. And the purpose of these indexes was simply to summarize the overall performance of the market into one number. To do this, we used house price index methodologies, like you would have Case-Shiller in America, which are simply indexes that summarize how house markets are doing. Because houses are non-fungible, we could take that same methodology and apply it to NFTs. And those were analytical tools. And as we were working with this, we started looking at these markets in more depth. And it was clear that with non-fungibility, there's a decent amount of liquidity risk, in the sense that if you want to buy an NFT, it has to be for sale. You might have to negotiate for it. And if you're sitting on an NFT, you might have to wait for the right price, the right bid to come along, which is opportunity cost. Or you might want to sell it directly and accept a lower bid, which is execution cost. So we said, how can we improve this? Fungibility, like you have in cryptocurrency markets, is very nice. How can we bring it back to NFTs? And we settled on fractional ownership as the way to do this, started building it, launched it in May. The way it works is you bring your NFT in your wallet to Niftex, you fractionalize it, you get ERC20s in return. Those ERC20s trade on a market, and there are also two ways to get the NFT back in order to enforce the value of the fractions. First is you need 100% of the fractions, but that's really hard. So we also developed a special clause, governance clause called the buyout or the shotgun, which is where if you have shards, if you have fractions, you can make an offer for the rest and people have to accept or reject. This was really important because if you can't get the NFT back, then what are the fractions really worth? So we went live with this. We had, of course, the thesis to start with was, do fractions of NFTs mean anything? The one project, I think the only project that did something in this direction before we started Niftex were the wrapped CryptoKitties, WC0, I think. And so it was very new, it was very experimental. I think it was done 2019, wrapped CryptoKitties. And so we were still very much in the process of proving this as a concept. Do people really want fractions of an NFTs? Does it mean something to them? Is there an impact of not owning, of owning less than 100% of an item? We didn't know this, so this was a starting thesis. And another thesis that we started with and that we're still very much working with, and that is more of a long-term thesis, is we personally think that fractions of NFTs have so many benefits that they will become just as popular, if not more popular, than trading NFTs themselves. And one of the NFTs that we fractionalized last year was Almaze, which is a rare Xe, a rare creature from the Xe Infinity game. Almaze was fractionalized and became ALMX. And what's really interesting is that if Almaze would have remained in one piece, it might have traded between some big wallets a few times in a year. It might have done like 500, 600 ETH in volume. But when we fractionalized Almaze and we allowed everyone to trade Almaze as if it were a cryptocurrency, and they did trade it as a cryptocurrency, we saw that it did 1,000 Ether in 1 week. So to us, that at least partially proved the idea that there is something in these markets. There's an entirely new scale of volume being unlocked. And with that, it of course generates more interest and might cause more people to enter the NFT market, which should benefit the NFT space as a whole. So we were very encouraged by the results of last year. So we fractionalized many different things: art, games, ENS domain names, decentralized parcels, etc. So which items did the best? For us, what we saw was that game items, like for example, Almaze, did the best. And I mean, this is all very experimental and we're very much in discovery mode, so we're not pretending to know anything as a fact. But we think that one of the reasons why fractions of game items are popular is that they have a very rich context. Art can have a very rich context, but it very much exists onto itself. It gives itself the most context. But with a game item, it not only has its own, but also exists within an entire virtual world. It can interact with other elements in the game. If it's a rare asset in the game, it becomes symbolic because it just represents that asset, and more people will want to own a piece of it. So we think these things at least partially explain their success. With art, for example, fractions of art, you see much more of a buy and hold perspective, and people that generally get fractions of art are more interested in using them for galleries. Like we've had people discuss with us building fractional galleries where they display their collection, but their collection aren't entire art pieces because maybe they can't afford them or maybe they couldn't negotiate for them, but instead they have fractions of them, which is very interesting. And of course, highlights the democratization that underlies fractionalization, right? You're opening it up from a will, type target population to an entire population. Anyone can now participate. Anyone can buy 0.0001% of the rarest assets, the most famous assets, etc. A lot of experimenting, of course. So we had someone from the Axie community, Cloud White, who created the Coke campaign, which was basically encouraging people to create artworks that used a particular Axie that had been fractionalized into Coke shards. And with Cream, Cloud White is encouraging people to have tattoos, and they are rewarded for that in return. Very interesting experiments. On the other end, we also had Margaret from Neon District, who started art pools, where you have to stake a fungible token and get fractions of art in return. Super interesting. Beyond finance, we also worked with artists who said that, normally when you create an NFT, an art NFT, you can have multiple editions, and many artists make use of this. But we've worked with artists that said, it doesn't make that much sense. If you're interested in rarity, it doesn't make that much sense to make multiple editions of your art. It makes more sense to have fractions of that same art, which we thought was a very interesting take and something that we didn't really anticipate ourselves. And then, of course, fractions can become collectibles in themselves. You have the democratic access. Many more people can participate, so that should also help the space in general. Governance for NFTs with on-chain rights, etc. Very exciting things. So, of course, there were frictions as well. One thing that happens when people bring an NFT for fractionalization to Niftex, they can set an upfront valuation. And what you see is that many people overvalue, like sometimes way overvalue the NFT, 100 times more than it should be worth, or something like this. And in the current state of the platform, that's not really penalized. Like, they can just go ahead with it, But the problem is that if you overvalue your NFT and the fractions of your NFT, nobody wants to trade them. Nobody wants to buy them. The market is not going to be very active. So what you want to do there is you want to have, the market should have a little bit more of a say in that initial valuation than it does now. And then liquidity, when you fractionalize an NFT, someone needs to provide liquidity so people can start trading, very much like how Uniswap works. And sometimes you see that someone fractionalizes but doesn't provide that liquidity, doesn't provide that initial spark, and then that market just doesn't do very well. So also room for improvement there. Then, of course, education, fractionalization for us and for everyone, I think, is a pretty new concept. You could argue that it exists in the real world, but how many people do you know in the real world that really have engaged in fractional ownership? I personally don't know that many people. So that means we don't just have to do education about what it means on the blockchain level, but just, in general, like, what does it mean to own a fraction of an artwork? What does it mean to own a fraction of a decentralized parcel? Can I participate in the governance? Can we decide together on what should be built on a parcel? What kind of campaigns can I create with this, like the campaigns I mentioned in the previous slide, etc. And then, of course, we built Niftex very much as a proof of concept because it was completely unexplored. And there are very big improvements we can make on the UI UX, which we're working on at the moment. So there will be a second version of Niftex coming out very soon, hopefully this quarter. Completely new website, much cheaper fractionalization, which is very relevant with the gas issues. More ways of setting your NFTs, better ways of reclaiming the NFTs. Bundles of NFTs have been massively improved. We're introducing our own bonding curve. You will be able to govern bundles. So you can, if you fractionalize a bundle of NFTs, you can continue governing to work together with everyone else that has fractions of that bundle and decide on the composition. Do you want to sell some of the assets in the bundle? Do you want to acquire more assets? And also, for example, NFTs with on-chain rights. If before, when you fractionalized an NFT with on-chain rights, you lost those rights. You couldn't make use of them anymore, which is a big loss, right? Like if you have an ENS domain name and you fractionalize it, and no one can set a registrar or something anymore, or if you fractionalize a decentralized parcel and you basically lose the rights to build on the parcel or to decide who should build on the parcel, that's a huge loss. So with V2, this will be possible. If you fractionalize an NFT with rights, everyone that is a fraction holder can come together and vote on proposals, just like you would do with Compound or other platforms. And finally, it will be an open platform, completely open source. We very much want it to be a community project, something that really becomes an extension of the NFT stack, something that is infrastructure for NFTs. So that's what we're going for. Yeah, it's
wonderful. That was such a wonderful.
It's mind-blowing. There's so many things behind just a simple concept, starting to create shard and fraction of one token and all it enables behind. Does anyone want to react to either from our audience today or on a panelist about what's been said on all the possibilities? Is there one thing or the current challenges, like Joel mentioned, like the fact that you lose by fractionalizing, you lose the utility for yourself and also for any owner of the charts? Is it a limitation, and how we can overcome that?
Yeah, I'd like to take a crack at it, if it's okay. I mean, first of all, great presentation, Joel. I'm really looking forward to V2, and some of the things you said really, resonated with what we are doing as well. So first of all, you talked about the importance of context in an NFT, not just in art, but any kind of NFT, and I think that's very important to sort of hold on to. I love the buyout clause you spoke about because we've incorporated that in a massive B20 bundle. And also the challenges or conversations around community participation. I mean, how do you truly democratize fractionalizing ownership, right? And I believe this is less about the technical aspect rather than the narrative itself. For instance, the massive difference between saying this is a fractionalized NFT versus fractionalized ownership. Technically not too different, but it sets wholly different expectations in the holder of those fractions. And we've sort of understood the difference in this narrative, and I think it's one of those weird things, right? When you're working on something at the engine level, at the software level, it's really simple. But once you start to describe it, it gets lost in translation somehow, or people hear it very differently. For instance, what Xcopy loved about it, and he wanted to fractionalize his artwork, Beeple honestly hated it. He thought we were going to break up his NFTs into tiny little pieces and give it to people. He was freaked out by it, and understandably so, right? Because the way we look at value also, I'll give you a little analogy. Indulge me for a minute, please. Think about a diamond, right? A large diamond, say the Kohinoor diamond. And I say Kohinoor obviously because my voice is brown and 200 years of colonialism and whatnot. But say I wanted to share the value of that massive diamond with the entire community. Now, if I brought it to the cryptosphere, I'd hear two ideas about it. One idea would be take the diamond, smash it on the floor, split it into a million pieces, and give a piece to everybody. Simple, right? It makes sense. But whereas the value of that diamond doesn't come from its individual bits, but because it is a composite piece. The alternative would be to take it, put it inside a large museum or a glass box, and not just open up the experience to everybody, but also the ownership. What if you gave shares of that museum? What if you printed 1 million keys and gave those keys to people? So they actually had, a partial ownership to the museum, to the experience, and to the asset inside it. Nothing's hidden away, nothing's locked up, and everybody's got access to it, and also get to share in the upside of those NFTs. So I think that's a really exciting direction to take, and I'm glad you brought that up.
Quickly, one quick addition. We are huge fans of fractionalization. What you do. I just want to share my screen. Not sure if you can see that. Here we go. What we have built. Not sure if everybody can see the screen.
Yes, we can see it.
We can see Patrick.
Okay, perfect. So it's basically, I think on the back of what Joel and the team have built, we've tried to track all these shards that they enable. And if you want to come to shardmarketcap.io, this is our little ranking where you can see the market cap of each shard, how much liquidity there is, pricing, and so forth. So if this is a topic that interests you, this is something you can. I hope we hope this is useful for the community and for tracking all these shards.
Yes, Patrick, I should have actually mentioned this because the amazing thing is that you guys just went ahead and built it by yourself and immediately understood what this was enabling without us having to pitch you in any way. It was more of a present when it was shown to us. And that's actually one of the things I didn't mention in the presentation, but a very basic thing is that at the moment you don't have live valuations for NFTs, right? You have to look at past trade histories, how you feel about the NFT, expert opinions and stuff like this. Once you fractionalize it, you have a live value, which I think is really important and may give us eventually a very different picture of the state of the NFT market than we're seeing at the moment. I think there are fundamental differences in the way these are traded, whether it's on a one-piece level or on a fractionalized level, and we might see big repricings and completely, changing opinions on this. And yeah, Jean-Marc Pep is a great contribution to it.
Yes, absolutely. I want to get the question that came from the audience maybe answered by Alex, because I think that will be interesting to hear your view on that. So it's interesting to see how this came about and relates to creators and whether they should have any influence on the NFT shedded.
It's an interesting question. I mean, I'm a big believer in like the permissionless space and that, rules should be enforced on chain. So I think the first question would be whether it's even possible to create an NFT which isn't shardable. And off the top of my head, I don't know how that would work. It would be pretty tough. So I think that, yeah, that's perhaps something creators are just going to have to accept, right? That like when you sell an autonomous token, that you are no longer in control of how that gets managed. And, like Twobadour said, you can just put that somewhere and, break up the ownership in some other ledger. So yeah, it could be a technical problem, I think. Yeah.
But also a very interesting one, as creators should or could ever say in that. I also have another question for you, Alex, which is whether you think trade funds will be a way to make NFTs more accessible.
Yeah, absolutely. I mean, Joel's presentation was really interesting because there's so much overlap with our projects. I mean, even the name, but it's cool because there's these two worlds of like the fungible and the non-fungible, and what Joel and Niftex is doing is basically fractionalization, and their system works really well, I think, for unique NFTs and like very high value NFTs, and then kind of the route we're going, which is more of like a basket route, I would say is better for floor NFTs. And they both have these benefits of like real-time price feeds and added liquidity, accessibility. So it's really cool that way. And I do think that like I will be contacting Niftex in the future asking for help and stuff, because like one of my concerns is like our funds. We have a couple that just have like one or two in the supply, right? And so it's like if our fund gets down to a supply of one, then I mean, it's basically a shitty Niftex fractionalization because we don't do it as well, right? So like our funds are designed to stay bigger. That's the hope. I mean, we are kind of experimenting to see how much we can push that. But yeah, we may also have to add some sort of features, in a worst case scenario, that there can be some sort of buyout or something, because with a supply of one, it's very difficult for one person to get all of that.
Yeah, it's true, right? So Niftex, NFTX, and NFTX are very similar in vibe, but there is that fundamental difference of the redemption of the assets, right? So
exactly.
It's almost complementary rather than substitutes.
I think it could be. Like, I think if we get down to like a fund of one, it's like maybe the solution there is just like fire this off and let Niftex handle it from there, right? Because it gets very difficult. How does one person redeem that if there's multiple owners? So we haven't run into that problem yet. It's more of a contractionary problem. I'm hoping that our funds will grow so that we won't experience that early on. But yeah, you might be hearing from me.
Yeah, you don't have to make it sound so formal. I mean, we'll be in touch for sure.
For sure, yeah.
Wonderful.
I think we'll be also hearing from Twobadour some potential solution to that issue. In the way they designed the B20, I think I heard there's great ideas as well to solve maybe partially that problem.
Yeah, we hope it is. I mean, can I present a few slides, maybe a little bit of context?
Twobadour?
Hello? Yeah.
Yeah, of course.
There you go. It's great to start with something we all agree on, right? Before we move on to more hotter takes. So one second.
Sure.
Can you guys see my screen now?
Yes, we can.
Awesome.
Yeah.
Bitcoin is NFT. Now, before you ask, no, I don't really mean BTC is an NFT. It's a metaphor on the nature of NFT. So bear with me a second. But if you do want to blame somebody for this, you can blame Metacoven for planting this in my head, and Andrew Steinwall for broadcasting it via the Zima Red podcast. So you should go check it out. So what I'm trying to establish with this is that the value of Bitcoin comes not only from its permissionless technical composition or its scarcity. I think the value comes from its unique origin story, the legend of Satoshi, the unimpeachable foundation of anonymity and of altruism. And like I was just discussing, NFTs are just that. They are tokenized stories, and they are also tokenized experiences, which is why they have such appeal in the world of gaming. And obviously, I'm preaching to the choir, but what can I possibly say about NFTs that we can't all unanimously or instantly agree on, or at the very least acknowledge? Let me see. How about something like NFTs are not created equal? Now, I believe there are going to be some highly valuable NFTs that carry a story that's powerful and relevant for a long period of time. And there are going to be an increasing number of NFTs that will fizzle out and die, which makes NFTs a very risky proposition for the average metaverse citizen or somebody walking in new. And like we were just discussing, Joel made a great point that we are nowhere near saturation. The demand is far greater than the supply right now, which can give us a false sense of euphoria. Everybody wants NFTs. Let's make a gazillion more of them, right? But what happens when we reach that critical mass? Now we know what DeFi bubbles look like. I mean, one pops up and another one rises somewhere else, and so on. But what would a truly illiquid bubble look like? And it's not very unlikely unless there is a steady and reliable stream of consumption. Because let's face it, all of the NFTs so far, the NFT classes that we've seen, have only been able to capture the narratives, the stories, the potential. There is no pattern yet of consumption, of having that space in which someone can walk in and experience those NFTs. And to create that stream of consumption, we need a shared thesis for value. And as part of Metaverse, Metacoven and I and our team, we find ourselves at a brilliant vantage point, right? And we soaked up all of this information, these insights, while immersed in this world among creators and artists and technologists and dreamers and some absolute DeFi degens. And we put this thesis to test. So I present to you B20, our $2.7 million Metaverse thesis. The week of December 11th, Metaverse spent $2.2 million on the complete set of one-of-ones from Beeple's Drop on Nifty Gateway. Now, acquiring a complete set in an open auction, especially one that's as whale infested and high octane powered like Nifty Gateway, is practically impossible. This makes this acquisition itself historic and a likely one-off, but this is a this was only part of the bigger picture, and we were able to push through the entire thing because it was bigger than us. Because B20, the way we see it, is not just an acquisition, it's a production. It's bigger than us, bigger than Beeple even, because apart from the $2.2 million, we spent another $500,000 on building a massive public art project across the metaverse. Builds in crypto voxels, DCL, Somnium Space, installing Beeple's art in it. We bundled it, we tokenized it, we opened up not just the ownership of this entire bundle, but also the experience as well. And because we had to move away from engaging with art by either just flipping it or locking it up. Here's a light, a sort of a bird's eye view of the bills that we have. They are going to be open. You can still check out the CV build whenever you want to. For more details, you can also check out the b20.metaverse.fund website. Now, why I show you all this and why we're talking about B20 today is that anybody can create an NFT or a bundle right now, right? But that doesn't mean it's always a good idea. And this goes back to, the point about context in NFTs. I think we share a responsibility not to, I don't know if it's too strong a word, to abuse the technology at our disposal. Technically, what we did is not particularly new as a concept. It's been possible to do for a while now, but there is a strong reason for doing it with this bundle, with this artist, at this time and at this scale. The upside of high value NFTs, like the ones in the Beeple bundle, must be accessible to everybody, sure. But for that to be sustainable, right, for it not to come back to one, uh, you need to respect the NFTs themselves and the story and experience that powers them. And the weird part is this is not a science and is not discoverable by numbers alone. I mean, Metacoven, who funds and finances Metaverse, has been collecting culturally significant NFTs since late 2016. He was collecting when land was dots on a screen, or when an F1 car could do nothing but exist on the blockchain, or when the potential of an Urbit galaxy was, well, galaxies away. And when nobody knew what to do with, art, programmable art that had a life of its own. And this is the best part of the metaverse. It forces economics to move out of its comfort zone and engage with culture, with people inside that milieu. And to capture the zeitgeist of this movement is why metaverse exists. So please, again, check out b20.metaverse.fund and let me know if what I've spoken makes sense to you, and tell us if you see what we saw. We believe that the next B20 could be your idea. We're looking for people who can produce experiences. We've been collecting stories so far because that's all that's available. And tomorrow we hope to collect experiences. If you've got a big idea, if you can entertain the metaverse, come to us. We'll produce it, we'll launch it, we'll share it, we'll bring it to life. So come talk to us, and thanks for having me on, Seb.
Thank you. A wonderful presentation. Thank you. I'd love now to address some of the questions we received from our audience. There's one which is very interesting. So do you think investors would buy NFTs that they could rent to other players in a game? Patrick?
Good one. Yeah, for sure. At some point, this is going to be interesting. Land, for sure, and I think that's already happening. We'll see if that applies also to collectibles. Yeah, absolutely.
Mm-hmm. Thank you. And the next one is
maybe I can add one thing on the topic. There's actually a working group that's been being supported by the Blockchain Game Alliance, but involve people from broader horizons, working on establishing a new standard for the renting of NFTs. So if people are interested to brainstorm with us into implementing that standard, you're free to reach out to us. We have on our Medium page, so I'll try to share the link after, how to apply and what has been achieved already. I think it's one of the powerful use cases that could really trigger a new economic model, one potential among many, but definitely a lot of interest in that space from various horizons, from what we hear.
If you don't mind, if you don't mind, I would like to show you something, how this could all be brought together. So we were talking about sharding from Joel. We were talking about building funds from Alex. Now we are talking about renting out. So there are all these different business models around NFTs. Like to share something. I'm going to share my screen again. Show something that we just brought to market. So I guess you can see my screen here. So we just very recently launched our portfolio tracker, which is basically where you can get a nice overview about all the holdings, all the different assets that you hold in your wallet. So you can. This is kind of the overview page, and you can see all the my currencies. You can see the NFTs, the non-fungible tokens that I have in here. So I can look at the assets. You can look at the NFTs, and you can start seeing the various collections that I'm currently owning. The idea here is over time to allow users to do exactly what was just shared. So to click on an item and then to share, to say, hey, I want to shard this, or I want to rent this out, or I want to add this to a fund and so forth. So, it's wonderful that we have different independent projects like Joel, Alex, and so forth, or Troubadour, who is building these experiences. We're trying to build kind of a platform, such a portfolio management tool, where you can plug into those features. One of the because this space is very collaborative, and that's something I think we all love about, and what Joel was referring about, that he built the capability of sharding. We jumped onto it and built the tracker for that. So, the industry is building, and we're trying to put this together. One of the features that we're trying to add here is our NFT value estimator. So quite simple. Right now, we just have CryptoPunks in here. You type in one certain number, I'm not sure, I'm just going to guess one, and it gives you a certain value. So this one is currently, I think that's a bit high, but it shouldn't be that far. And we're about to start including these real-time valuations for the NFTs on your portfolio. That means that every time of the day, you should be able to get the value, a real-time value based on the last current sales which have happened, onto your in your wallet through this tracker, and that gives you the possibility of knowing exactly what your value is. So if something happens in one of the experiences that Troubadour is building, and there have been some sales, this should be tracked in here. So yeah, something that I wanted to share, to bring in, that how could all of this, what the community is building, could look like when it's put into one nice tool, and that you how could this be amassed and aggregated, if that makes sense.
That's very interesting. Thank you for sharing. There are some more questions as well from the audience. I'm just going back to it. Yeah. So Marcus was asking, the NFT space is expanding and is attracting global brands to the concept within the space. However, many global brands have standards that are not well represented in the space. Embracing ethical standards may become as important as utility for future mass adoptions in the NFT ecosystem. Would you agree? So I'm interested to hear from Alex as well, and Joel, perhaps. I think you need to unmute yourself.
There we go. Sorry, my bad. Yeah, I was just saying people might not be very happy with this answer, because I'm kind of like chaotic neutral. And yeah, I think, it's great to embrace ethical standards, but at the end of the day, it really also comes down to like what's actually enforceable, right? And it will be interesting to see, like, sooner or later we will have a big NFT related hack. I really hope it's not NFTX, and I don't think it will, but sooner or later it will happen, and I think that'll be really interesting to see, because right now we have the situation when hackers get fungible tokens, they even sometimes are negotiating with the person that stolen. So it's like, what happens when those tokens are actually fully traceable, and it's very hard to wash them, and it's hard to unload them. And also what happens, like within the NFT community, like will the NFT community come together and say, hey, this is bad, let's, blacklist anyone who buys these stolen items? Or will they be like, nah, I'm going to take that and I'm going to flip it for a profit, right? So I think it will be really interesting to see. And I'm all for ethical standards, but it also really just comes down to, what's feasible.
No, it's funny
Absolutely.
you said that, right? Because this is something Metakovan and I discussed just a couple of days ago. In something like the Mona Lisa, that work of art was stolen, and that became part of the story as well. So knowing the people that we know in this space, I think they'll just co-opt the whole story of an NFT being stolen and sort of tokenize that too, I wouldn't be too surprised. But yeah, it would be an interesting conversation around what would happen. Like you said, you can't hide it. It's very obvious. It's too unwieldy to sort of spirit away somewhere and lock up. So that would be interesting.
For sure, yes.
Yeah, I was just thinking, like, but I was thinking about what is this tornado or something? This thing where you send ether and then it gets replaced with someone else's ether. But of course, that wouldn't work at all for NFTs. Like, there's no way to, because they're non-fungible. Although, if they would have multiple editions of the same, for some NFTs, it could work, I guess, maybe. But yeah, you will never lose that trace. I mean, Alex said that he's chaotic neutral, and in general, the blockchain is chaos. I was reading today about some kind of compound governance vote where a certain party is not trying to buy votes in order to, get money down the road. This kind of behavior is, I mean, it's not encouraged, but it's a natural consequence of building a permissionless system. And yeah, sure, I think ethical standards are important. I myself am not super aware of unethical things happening at the moment, apart from the occasional weird high-value NFT trade. But you can set a standard, an ethical standard, and a certain group of people will adhere to it, but a massive group will just not care and maybe not even be aware of the ethics and just do their own thing, right? So we can't enforce the entire space to be ethical. I think we have to be very realistic about how far we can control things. And I honestly, it kind of feels weird to talk about control in the blockchain context. I'd prefer to find a decentralized way of enforcing ethical standards than some kind of charter that is, sent from above.
Absolutely, yes. So as we are coming to an end to this talk, I would like to ask one final question. So NFTs and DeFi have sort of dominated the scene in 2020. So do you think that fungibility can upgrade the NFT market in 2021?
Hell yeah.
What Alex is doing there is exactly the right way. He's putting that all into funds. That's going to rule. I mean,
well, and same with Joel, right? Like, I think that's there's definitely a pattern here where people are trying to integrate NFTs and DeFi, and I think there's multiple strategies to do it. Like, you see some people bringing DeFi services over to the NFT space. I think another strategy is to just change those NFTs so that they're fungible tokens and just lock and load them right into what's already built with DeFi, right? So I'm hoping that, yeah, it really does level them up, and that we see. I also hope that like NFTs can be used in more circumstances. For instance, if you know that like a punk female token is selling for 5 ETH, then if you own a female punk that you can always liquidate that for at least 5 ETH, and then that allows you to use it as like collateral. So I am really hoping that a lot of stuff opens up this year.
That's exactly what we expect to happen this year, or sometime soon. That you can walk around with your collection of punks or avatars or whatever, and you can get a loan you can get a mortgage on that.
Yep.
Simple as that.
That'll be interesting. I'm going to wait for that date to happen this year. And do you guys have any sort of application that you will see becoming popular in the year to come?
Apart from B20, you mean?
Apart from that.
Oh, okay.
And that included.
No, I'm sure. Like I said, a lot of gaming in-game NFTs have become cash flow tokens, right? Stuff that people bought 2 years ago, 3 years ago have started to pay out once the games have become more interactive and immersive. I think 2021 will be the age of experience. Like Alex was saying, funds will play a massive part. Fungibility will play a massive part. But it'll do so because we will start to discover what we can do with those NFTs rather than what they're worth on that particular day. Like Patrick says, once you figured out that, okay, I can use this NFT as collateral, or I can empower this NFT to do some structural changes in a DeFi protocol, or, you know, make it all powerful or something like that, then fungibility makes a lot more sense, and it'll last a lot longer. So I think 2021 is going to be the year of that.
Wonderful. Let's see what's going to happen.
It's a lot of excitement, and specifically as we all of the amazing things we've been discussing are actually being made without needing the permission from the original NFT creator, or even having a single conversation with all those games or startups that initially created the contents. So it's already beautiful that in 2021 we're one layer above or on top of it on the ecosystem of everything being able to do, and how users can interact with those NFT without not yet interacting with the main DApp behind. So I'm really looking forward to that, for that to take off, and I'm excited to have had that panel with you today, as you're already building that part of the future with all your respective ideas, project, and platforms. So thank you for sharing with us today all those insights for 2021. I really wish they will turn true. And once again, an happy, amazing New Year 2021 to all of us and all the people and community involved in NFT space.
Thank you so much, everybody, for joining us. You can follow the BGA, all our activities and news. These are our channels, and we'll see you again next week for another event. Thanks again to our speakers and to everyone that came to watch us live today. Thank you all.
Thank you all. Bye-bye.
Bye-bye.